Now, Premier Energy is in focus because government has targeted Swadeshi solar value chain by 2028. Now, this includes your cells, modules, ingots, wafers. Now, why we are doing this? Because India is completely reliant on China, when it comes to these components. Like, for example, the domestic capacity of wafers is just 2.2 gigawatt. So, this target will actually help us to, move beyond China. Now, onto the Premier Energy, this will actually benefit this company because company is into cells and modules manufacturing. And onto the order book, or rather onto the capacity, if I were to talk about, has an aggressive capacity of cells, ingots and modules of beyond 10 gigawatt by 2028. They have a vision for 2028. Onto the order, if I were to talk about, as of June 2025, the order book stands at around 8,300 odd crore. And lastly, if I were to talk about the revenue by geography, the domestic revenue contributes almost 99% for the company. Rest is export, it's just 1%. And modules contribute almost 70% plus of overall contribution, followed by cells and others. So overall, this target of Swadeshi solar value chain will actually benefit when it comes to Premier Energies overall.
Okay, thank you so much, Varsha, and glad to get all those details in. Vinay Rustagi joining us this morning, Chief Business Officer of Premier Energies. Mr. Rustagi, thank you so much. Tell us a bit about these Swadeshi solar cells. Let's start there.
Hi, thank you for having me. Like your news person mentioned, solar value chain comprises 5 different stages of manufacturing. Starting with polysilicon, ingots, wafers, cells, and modules. Cells is actually the most complex and technology-intensive part of the entire value chain. Currently, because of the government policy, this part of the business is growing very rapidly. There is something like 50 to 60,000 crore rupees of investments which are going into cell manufacturing in India. We ourselves are one of the largest cell and module makers right now, and in fact are expanding our capacities to 10 gigawatts over the next 1 year. The idea is that with cells being made in India, India should be completely self-sufficient in this business by about in the next 12 to 15 months.
Is there any government subsidy for your move on Swadeshi solar cells? What is the kind of investment right now? Trying to understand what this actually, it's a great concept and of course something that the nation needs. But what is the impact it's having for you on your books right now?
See, the impact that it is having on our books is that what the government has done is the government has imposed some duties against imports. And then there is also a policy to use only India-made cells as far as possible in most of the sector. So what that has done is it has boosted the demand for domestically made cells, as a result of which companies such as ourselves are directly benefiting. Our order book is in fact, even over the last 2 months, it has grown by more than 2,000 crore rupees to go to cumulatively to about 10,500 crore rupees. So these moves by the government have given confidence to companies, including us, to invest more in the business. We are currently undertaking a 12,500 crore rupee capex over the next 3 years, and to indigenize the entire value chain in India.
Mr. Rustagi, this is Harsh here. So what does this do, sir, incrementally to your top line? I'm just trying to understand and give maybe viewers, investors perspective. Do you expect to see a stronger top line growth, medium term, long term? And if so, how much? Could you quantify it for us?
Yes, sure. So like I said, we are currently in the process of more than trebling our capacity. So both cell and module, we are going to between 10 to 11 gigawatts by next year. So definitely that will result in almost a pro rata impact in our top line. And then our further plan is to go into related areas like batteries, inverters, and also upstream solar manufacturing, ingots and wafers. So all these things together should boost our top line by something like 3 to 4 times over the next 2 years.
Vinay, hi, Neeraj here. Just trying to understand, the growth rate anyway seemed very, very strong. Now, does this add a layer of further growth in the next 2-3 years? or are capacities constrained for the time being, and this will be a growth trigger for beyond FY28? Just trying to understand.
Well, actually, if you see the growth trajectory for the solar sector in India is extremely strong. In fact, we are very confident that growth is going to surprise us on the upside because all the measures that the government has taken, whether it is the residential rooftop solar market, the agri solar market, or the corporate market, are now bearing fruit and growth is on a very strong upward trajectory. So that is one part of the picture. Second is, we must remember that India is one of the, in fact, the most competitive solar module producing nation, bar China. So to the extent that India is able to negotiate favorable trade treaties, with EU, US, etc., we expect a healthy pickup in export activity, which should give us a lot of scale and cost advantage. So, those are two things because of which there is a great growth momentum. The third thing is that with the growth of the solar sector, there is a lot of growth coming up in allied areas. For example, storage. Storage, we are going from almost zero as of last year to something like 40 gigawatt hour on an average year on year within the next 2 years. So, and we ourselves are setting up a 12 gigawatt hour battery storage manufacturing capacity. So, because of these, we expect a very strong pickup in the sector overall, as well as in our top line and bottom line over the next few years, even beyond FY28.
Got it. Okay. But that was my point, that would capacities allow you to take benefit, or capacity constraints restrict you from taking advantage in the very short term of this change, even if the opportunity were to present itself?
No, I mean, we are a very nimble and agile company. We have a very strong balance sheet. So we are constantly evaluating the market, both in terms of greenfield opportunities as well as acquisitions and other inorganic opportunities. So we are able to assess in a very quick space of time the overall demand supply situation. And in fact, are looking at various other proposals to ramp up the pace of our growth and capacity even faster than what we have announced in the market right now. So we are ready to move as and when the next phase of opportunity arises. You would also know that we also have a plan to set up a manufacturing plant in the US. Now, that plan has been on hold for the last few months, given all the uncertainty in the US policy. But as things begin to settle down over there, we will definitely take up that opportunity and also look to grow our US business. So I think on the whole, we see enough growth levers for us over the next few years.